Hello everyone. In this video, I like to discuss is this the right time to enter into the market? We all know the present issues which is causing the market to fall and corrected around 10% from the peak this year. So, I did the research and I like to discuss about how market reacted in the previous similar time scale and finally what is my opinion. I agree, every situation in any given period in the stock market is unique, but worth to look back for clues. I found 5 similar incidents in the stock market in the last 10 years. I am listing it out here so we can see how market reacts to that in the further slides. First, Crim Annexure in 2014 during February and March. Second, Doklam standoff. Third, again standoff in May-June 2020. And finally, Fed interest rate hike, which we can divide that into two. Initial interest rate hike in December 2015, that is from 0.25 to 0.5, and periodic interest rate hike from 0.5 to 2.5 in the span of 2 years. First, Crim Annexure. The graph shows the Nifty's reaction during January to May 2014. During Jan 2014, Nifty peaked after the rupee crunch in 2013. Then the uncertainty about the annexure was happened in February 2014, so the market corrected 8%. In the March 2014, the annexure was completely finished, but the market didn't react at all. It was on the rally by expecting the new government in May 2014. Second, Doklam standoff. It happened between June to August 2017. There are two major incidents happened during standoff. In both the time, the market corrected 5% and 8% respectively, then continued the rally. Same happened in May-June 2020 standoff. During the two major incidents, market corrected 5 and 3% respectively and then continued to grow, as it was already trading in very low price compared to the potential economy of the country. Now, the interest rate hike. Almost for 6 years from 2009 to 2015, Fed kept the interest rate at constant 0.25. But during 2015, the whole year, investors always had the fear of increase in the interest rate hike. As Mr. P.R. Sundar says, always market take the bad news and good news but not uncertainty. So, from the new government rally happened during the year 2014, the market corrected 20% till the interest rate hike in December 2015 and another 10% until the end of the financial year. Then the final one, periodic interest rate hike from 0.5 to 2.5% at the rate of 0.25 every 2 months approximately. As we all know, in December 2016 is when the demonetization was happened. Though the market didn't care, it just keeps on increasing. So, that's all the 5 related global incidents and our stock market reactions. Now, what is my opinion? At present, whole Indian stock market cap is 3.15 trillion US dollars, which is 96% of the Indian GDP. Now, based on IMF October 2021 World Economic Database, India's current GDP is 3.25 trillion US dollars. It is expected to increase 3.5 trillion US dollars in 2023. These are the other two bars. If rupee maintains 75 and 80 rupees with respect to 1 US dollar, which I think it will, then the Indian GDP in 2023 will be 3.7 to 3.8 trillion US dollars. As per the market cap to GDP ratio, if anything goes below than 90%, then the market is considered as undervalued. Nifty 15,000 is equal to 90% of the Indian current GDP and 85% of 2023 country's GDP. So I don't think this any time this year Nifty will go below 15,000. Again, it is my opinion. It may go down. I don't know. Financial year completion effect in March. I think the market is down because both DII and FII, in order to clean the book by offloading the bad stock, they are utilizing these opportunities. Because of all those reasons, at present I am averaging all my quality stocks as the market falls further. Consider subscribing this channel, it will motivate me to do more. Finally, disclaimer. Thanks for watching.